Hello, everybody. Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. Today is May the 6th, 2025. Can you believe it's already May? Are we having fun yet? Volatile times for traders in the markets and volatile times in general. So good to be with you again. And before we jump into today's session, I just want to mention we announced on Saturday. Was it Saturday? We announced last week when I did the special interview with Jake Bernstein and Peter Eliades that we had 10 scholarships to offer to our upcoming New York City conference. We only have 2 left. So 8 out of 10 are gone. And there's 2 scholarships left. So if you're interested in taking advantage of a generous donor who's helping to make sure that those who can benefit from our upcoming conference can attend in person, there's be a link in the chat here and in the show notes. But please take advantage of the last 2 scholarships available. The conference is shaping up again to be an incredible event. Really looking forward to it and hope to see you there. So today, going to get to a what I think is a very interesting signal. It's a signal that makes me nervous and uncomfortable, but that's probably another sign that it's a good signal. But before we get there, we'll of course review last week's cycles analyses. And then work our way up to today's topic, which is stocks versus gold, in particular stocks priced in gold. So I've been exploring, there's been this idea in the air that maybe the dollar might not be the world's reserve currency forever. An idea that's been around for 20 plus years now that I've been in the markets. And but there's been a lot of talk about gold, and for good reason, right? Gold is making all-time highs and is rightfully getting some attention, well-deserved attention, let's just say. But we'll see if it hasn't gotten a little ahead of itself together with what's going on with stocks. And when you look at stocks and gold together, it gets pretty interesting. So with that, good to be with you today. We're going to dig into some charts and then we'll talk a little bit at the end. Let's go. All right, so we're going to start out here with where we were last week at this time. So of course, we know that there are some very strong signals in equities right now on the daily data, very strong buy signals. And Lars has talked about this. I've talked about this. Here we have 4 different cycles, 332, 179, 123, and 80, all forming a composite cycle. And here we were last week with the cycle turning up and a buy signal on the daily data from the cyclic RSI. And that up move has continued rather unrelentingly since we were last together. So, so far so good on the daily data. Meanwhile, I was getting a little nuanced and saying that, well, the daily data is really bullish, but let's be a little cognizant of what the cycles are saying on the shorter term data. And this is the 2-hour data. In particular, here's where we were last week. We had the 111 and the 286. And, not super strong cycles on the spectrum, little muddy, but definitely indicating some caution. And meanwhile, the daily cycles said, what caution? We got a little dip there on, I think it was Wednesday, was this? The next day, Wednesday the 30th, a dip into the morning. And then that reversed sharply and intraday and has been, pretty much nonstop since then. 5,700 right now on the futures, at least as of yesterday. Let's see where we are right at this moment in time on the E-mini S&P futures. Yeah, right there around the 56.45 right at this moment in time. So pulled back a bit, and maybe we can. But overall, you have to say that so far this caution from the 2-hour cycle has not materialized, and this was the 1-hour data on the S&P 500. Also, this 203, pretty clear on the spectrum, and signaling some caution here. And meanwhile, we had that intraday reversal, and now here we are about now. So I wouldn't call that a very successful call. Interesting, though, that momentum is really coming off here, even though price is higher. So that's a pretty significant negative momentum divergence. And I still am, not backing up the truck on buying equities right here, for, say, the next 1 to 2 weeks. I'm still looking for a pullback myself. And in these situations where, you get a huge move up, and then the short-term cycles start to say caution, right? Usually going to at least get some sideways action. And you want to, the way I trade it, I like to get involved a little bit, but not take my full position. That way, if things keep going straight up, then at least I got some skin in the game. But if I get a pullback, then I can add to my positions. So that's where we were last week. Again, the daily cycles chugging right along. The short-term cycles have gotten, let's just say, more extended. So if we go and grab the latest data here and integrate that into our cycles analysis, momentum, making new highs, cycles pointing down, but we really haven't gotten that sell signal from momentum yet on the 2-hour data. And on the 1-hour data, let's see here. Wow, cycle. Oh, need to unpin the cycle, refresh that analysis. So we're actually moving into an up phase of the cycle on the hourly data. We'll see, though. It is a pretty good Bartels, but I think the daily cycles still are the most important thing going on in equities right now. All right, so moving on from last week to this week. This is a chart of the S&P 500 divided by gold going back to 1885. This was very interesting to me. Forget about the cycles just for the moment. let's just talk about, in 1884, the S&P 500 was less than an ounce of gold. So one share of the S&P 500 was less than an ounce of gold. Into 1929, it peaked at about 1.5 times the price of an ounce of gold. And then that came down dramatically, all the way back down to 0.2 again. So all those gains of stocks versus gold were given back, and gold crushed stocks from 1929 to 1932. That's a pretty crazy spike right there. Obviously, when you price the S&P 500 in terms of gold. So, from 1.53 down to 0.2. Brutal. All right, so time marched on. And equities, again, after World War II, started really trouncing gold, got above the 1929 highs, peaked at 2.8 times the price of an ounce of gold. And then 1967 came along. I'm not sure what happened in 67, but gold started gaining on stocks again and took the number all the way back down to 0.14. I mean, this is fascinating financial history here. So gold, again, was more valuable than the S&P 500, even more so than it was all the way back here in 1932 and 1885. So then 1980 came around, right? We had the Volcker Fed in here, crushing inflation, and stocks again gaining on the S&P 500 all the way up till 1999, peaking at 5.6 times the price of gold. So that's some interesting history to me. And it was, I'm a little embarrassed that I didn't know this, but gold has been, stocks peaked relative to gold back in 1999. And gold was gaining all the way into the financial crisis, 2009, right? Came back down here, 0.6. So the S&P was less than an ounce of gold. And then since 2011, gold was gaining. I mean, the stocks were gaining, but now kind of rolling over again. So that's just weekly data looking at the S&P 500 divided by gold. If we look at the recent data, so we've got about 1,350 weeks in here. If I go back about to the peak, you can see some interesting cycles. 181, we know that cycle, right? That's the 41-month cycle. 228 and 121. Suggesting that we can see, at least over the next few years, stocks gaining on gold again. So stocks up, gold down over the next few years is the theme for today. Not a theme I'm entirely comfortable with. I'm just presenting you with the cycles analysis, okay? This is the weekly data on just the S&P 500. Interestingly, when we look all the way back to, this is going back to the 1800s, 1871, right? We can see the 180 week cycle, 181 week cycle sticking out here on the spectrum. And also this 364, which is 2 times 181 basically. And then gold has a spike at about 230 weeks, which is a cycle that we often see in treasuries also, which is interesting on the weekly data. All right. So if we just look at, say, the past 850 bars, maybe like we usually do, we see this 219 again, suggesting that we could well see stocks gaining on gold based on just looking at the long-term weekly data right now. Similar if we add in these other cycles, this 355. So from the weekly data, the picture is pretty clear. All right, so now I'm going to go to the daily data. And I'm going to start out here looking at just the daily data on the cash S&P 500, okay? This is what we've been looking at. We know we've got these multiple cycles bottoming here. This was as of May the 5th. Just missing a day, but got 4 cycles, 1, 2, can even add in this one. Let me just start this from scratch. Clear momentum buy signal. Very well-defined spectrum, right? Lots of cycles with good definitions on the edges, isolation from other cycles, depth going, in the edges going all the way down to the bottom almost. So excellent spectrum on cycles. And again, as we've seen, suggesting, the wind in the sails of stocks until August on the daily data. Meanwhile, on the daily data in gold, the spectrum is not as clean, right? We don't see the nice peaks with the high Bartels and the green triangles on top. Instead, we have just one cycle with a clear green triangle and recognized by the AI engine. That's the 266. But on the whole, a few cycles that suggest 260. If we take the 1, 2, and 4, we can add in the 3 here as well. Let me just do this from scratch again. And this is just on GLD. For those that use the product, I do like to, increasingly, I just type the ticker right into the URL. Just find it gives me a little more stability on the web page. So we've got this 266, 51, 110, and 188. And if we add in the cyclic RSI, we've got pretty clear topping in the dailies on gold with a momentum sell signal here. Now we've got, gold is retesting its highs at the moment, but there's a pretty significant negative momentum divergence. So when you look at, the pretty wildly bullish cycles forecast from the daily data on stocks and the pretty wildly bearish cycles from the daily data on gold, we shouldn't be terribly surprised to see a pretty powerful signal when we price stocks in terms of gold on the daily data. And here's what that looks like. So this is the S&P 500 divided by the price of gold. Okay, so right now, and I should say it's not the price of an ounce of gold here. This is just GLD using the ETF. Take all the cycles off. We'll start with number 1. You can see it on the spectrum, right? 183. Right at the bottom. Definitely got upward momentum, not quite crossing into the blue line yet if we're looking out at the longer term cycle, that 183. But if we start adding in the other cycles like the 123, that shortens the cyclic RSI a little bit. Add in the number 3 cycle, which is the 78. And pretty much all these cycles are all bullish, right? So we can even add in the number 4 and the number 5. And if we put our cursor over the last data point, see if I can do this. Yep. So now it's over the last data point, going to kind of exit the chart and look at all these cycles. They're all green or turning green, right? So orange with a green dot means bottoming. Orange with a red dot means topping. But all 5 of these cycles, which are the top 5 ranked cycles, are all bottoming or in an up phase right now. And we've got a significant buy signal, very strong buy signal from the cyclic RSI. So what this says is buy stocks and sell gold. Okay? Don't shoot the messenger. I get it. That's not what a lot of the world is saying right now, right? Saying sell US stocks and buy gold because the US is losing its legitimacy and alienating its friends and is just another country that no longer deserves its exceptionalism and exorbitant privilege of being the world's bank, broker, and currency. The cycles say different. Now, my personal view is that the cycles are probably right. My own personal view, just my beliefs, I'm just a little, nobody like everybody else. I don't know what the future holds. My sense is that all the privileges and unique strengths that the United States has built up over the past 40, 50, 60 years in particular are not going away overnight. They're not easily replaced. And so that's just my personal sense. I know that we're in a difficult place right now. I know that there's a lot of very smart people who are closer to the action than I am, who think differently, and I deeply respect those positions. And I'm not saying that they're not right. Okay, I'm just saying what the cycles say and what I believe. And I've looked at it pretty deeply. Though admittedly, I'm not an insider, so I don't really know. I'm not even sure the insiders know, frankly. So meanwhile, here's a super strong signal from cycles about as strong a signal as I've ever seen from cycles on the daily data, which say at least, over the next, into the middle of summer, again, kind of August, buy stocks and sell gold. It's not what's really happening today, right? But this is talking about weeks here, right? Even a couple of months. We're in May, so that's June, July, August, like 3 months, a quarter of action that by August, we'll see stocks higher and gold lower. That's what it says. So on that note, and again, sharing my own belief about the viability of this outcome, okay? Acknowledging that I don't know, right? I loved what our interviewer, Valerie Gastaldi, said on Cycles TV, interviewed by Ron William, when she said, technical analysis doesn't tell you what the futures holds, right? It just tells you where to put your stops. That was a very insightful observation that that I think is true, right? But I do think this is one of those high odds. Well, let's say it's a very good reward to risk ratio, reward to risk play here. You've got a small downside here, of stocks making new lows and gold making new highs. That's not that far away from happening. So you can keep a tight stop. But if this does play out and stocks go up and gold goes down, then the reward is potentially huge, right? So it could be, so it's really a good setup. We don't know, this isn't telling us that stocks are gonna go up and gold's gonna go down, okay? And I'm gonna show you how this setup has happened before and it didn't necessarily materialize. But it is a good opportunity and a low risk opportunity with a high potential reward. That's what I'm seeing. So now let's go back and look at this chart. This is the last thing. So this is also the S&P 500 divided by gold. Okay. Let me just actually go back. Oops. Okay, so this was from here. Let's go back, our typical 850 bars-ish. So do a similar analysis. This is 2008. And if we look at the spectrum here in 2008, not as clear as it is today, right? So here's the spectrum today. Lots of really well-defined cycles in the S&P 500 divided by gold. Not as clear back then, but we can still do an analysis and look at what the cycles were saying. Sorry. If we just take the 1, 2, 3, and 4 again, the cycles aren't as clear, but you had a pretty compelling confluence of the cycles that were available, and you had a momentum buy signal back here, and this was March of 2008. If I turn back on the out of sample data, we got a little bit of a rally, okay? Nothing dramatic, but we did not get, basically gold gained on stocks into the crisis bottom in 2009, March 2009. So didn't work out back in the middle of the crisis of 2008, okay? So let me stop now and go back and let's talk. Are we in the same place today that we were in the middle of the crisis in 2008? I don't know. I lean against it. But we are in a serious time. There are serious things going on. And what's going to happen remains to be seen. So if we are going into a very significant crisis like we experienced in 2008, then yes, gold's going to continue to gain on stocks. Meanwhile, the cycles right now suggest the opposite very strongly, as strong as I've ever seen. And I think we have to acknowledge that there's a lot of noise in the media right now. And we don't really know what's going to happen. And my own personal belief, call it a bias, but it's my belief, as Van Tharp said, we all trade our beliefs. As I've said many times, bulls make money, bears make money, pigs get slaughtered. So that's my belief that the noise is going to fade. I know it's hard to imagine, but it was hard to imagine us being where we are just 2 months ago, right? If you look back 2 months ago and you say, were we going to be in, global meltdown narrative? I didn't see it coming to the degree that we're in right now. All right, so let's see. Wow, the comments are coming through fast and furious today. Great, appreciate it. Fleur, thank you for that insight into how you trade a difficult market. Yeah, it's difficult right now. Trading is always difficult. It's particularly difficult right now. I've been talking about that a lot. Okay, sorry, Peter, if you had some trouble, technical difficulties. Hopefully that resolved. S&P 500 was created in 1957. Fair point, Cam. Stocks headed to zero. Hourglass, purple, sand, orange. Hey, go for it. I mean, it's a lot of people I really respect think the same. So no objection there. Has anyone found the cycles in Kondratief, maybe Kondratief? I know I've watched the 18.6 piece, but 18.6 doesn't show up in gold or stocks. We've covered that in some of Cycles TV. Those are long-term cycles. The Kondratief typically like 50 to 60 years. I think 54 is a typical number. 18 times 3. Can't say too much about it today. That would be of value. Tony Plummer had 2025 to 2028, which was the same cycle that Valerie Gestaldi, that woman, discussed along with Tony's work. Yeah, I'm learning more about Tony Plummer's work. It's new to me. I'm interested in it. I don't have any definitive opinions myself about what his work says about the current time right now. So I'm still learning. It's new to me. Cam, Elliott wave by Prector, stocks will lose to gold in the next 40 years. Short term, I can be wrong. Gold is turning. Yep. Cannot tell you when. Yeah, I mean, look, I'm talking about the next 3 months right now, not the next 10, 15 years. I am well aware of the serious valuation issues, the serious debt issues. I've covered Dalio's big debt crisis. I'm not hiding my head in the sand here. I'm just telling you what the cycles are showing for the next 3 months. All right, Trader Gene and Cam, you guys are having a back and forth here. Excellent, appreciate it. Sounds good. How can you trade a cycle when China-US trade negotiations are ongoing? Well, Dewey called cycles the mysterious forces that trigger events. Again, appreciate Valerie's point. Technical analysis doesn't tell you what's going to happen in the future. It tells you where to put your stops and helps you find good reward to risk opportunities. So I think we're in one of those situations where it's a good reward risk opportunity, where you can have a tight stop on something that, if it surprises, which I think is possible, could be a very significant move. Anish, can we discuss BTC? Yes, we can. Stocks go up and gold staying the same will also validate the thesis. Absolutely. May I ask whether the cycles break down in a black swan event? So, good question, Fleur. Look, there are cycles and there are cycles. So, the shorter term cycles can absolutely break down in a in a big event, and we in the cycles community have been talking about the increasing risk of a big event. We know the 41-month cycle, 181-week cycle has topped. If you saw my interview with Peter Eliades and Jake Bernstein, I showed the 41-month cycle there, which we forecasted back at the end of 2023, peaking at the end of 24, beginning of 25. I hardly believed it myself, but there it was. So yes, and that's also what I was trying to highlight in the 2008 financial crisis. I just don't think that it's clear yet that we're really in that level of crisis. I don't think it's clear yet. It's possible, but not clear. Hello from Argentina. Difficult moments are great opportunities. And, they're great opportunities if you have some capital left and you didn't make, overly stretched moves that basically debilitated you when those great opportunities arose. Okay. So manage position sizes. If I'm right, if the cycles are right, okay, this is going to unfold over a few months. You can scale into some positions. That's the opportunity. Public's often right during trends, but wrong at the ends. Yep. Bill Cerubi covered that in our contrary opinion interview. That was a great one. Bill sent me, and you probably have all seen this, but there were 3 editions of The Economist in a row, all talking about, I should find that and show you guys. Give me just a second here to find this. Yeah. All right, just got to make a little adjustment here. Oops. So this was Bill Cerubi sending me this email. These were the 3 bearish magazine covers over 3 consecutive weeks. Okay. I know these are not high resolution, but how a dollar crisis would unfold, the age of chaos, and ruination day. So from a contrary opinion, I mean, this is pretty much a ringing endorsement of stocks up, gold down. So that's pretty good. All right. Why do you focus on this particular ratio? Well, I just was interested in looking at stocks priced in terms of gold, right? So the gold was kind of the reserve currency of the world for a long time. And gold is getting a lot of attention right now. So I wanted to look at stocks priced in terms of gold. And on that note, and to finish today, I actually have a couple more charts of things priced in gold to look at. So here are TLT, so that's the 7 to 10 year treasuries priced in term divided by gold. Okay. So also pretty nice cycles, this 127 and 173. And we can even add in this 61. And all of them are saying that US 7 to 10 year treasuries are going to gain on gold, and we've got a pretty good momentum buy signal right here into July. And then, this was the weekly data of 7 to 10 year treasuries priced in terms of gold. So also a lot of support from the cycles for the idea that US treasuries, which are the big thing that's being called into question at the moment, is the world going to continue buying US treasuries, or are they going to flee to gold? The cycles on the daily and the weekly say treasuries are going to gain on gold. And then finally, Bitcoin. So Bitcoin divided by gold, not as clear as we see with stocks and treasuries. I did one stocks divided by Bitcoin, shows stocks likely gaining on Bitcoin. But this shows, a slight favor of Bitcoin over gold in the short term, at least from the daily data. And the weekly data, not as clear, saying gold could gain on Bitcoin. Just one big cycle here. Actually, if we, this says gold could gain on Bitcoin. Again, this is weekly data. And again, we don't know what's going to happen. Okay, we're looking to use the cycles together with momentum to look for good reward risk opportunities. So that's what I got for you today. Personally, I'm kind of hoping for a pullback with a lot of media noise with a positive momentum divergence, to be buying some stocks and selling some gold for a trade over the next 2 to 3 months. That's what I'm looking at. And whatever you do, though, be safe, be smart, and make sure you got some dry powder if the wheels really, come off the track, the train comes off the track. All right, careful out there, everybody. Have a great week, and see you next week.